This is Matthew Cratter from Bitcoin University, and today I wanted to talk about Bitcoin and OTC trading desks, over-the-counter trading desks, and I'm going to explain what that means in a minute. And the two basic questions I want to answer are, can big companies like BlackRock make money manipulating assets like Bitcoin? And number two, do OTC desks affect the price of Bitcoin? These are two very important questions when it comes to BlackRock and when it comes to OTC trading. This question came up in my video yesterday, which was about BlackRock possibly manipulating Bitcoin. And the question from JN003 was, markets are manipulated by big players all the time. I sensed something was fishy after Larry Fink was rolled out around the 5th of July, 2023, when he made the digital gold remarks about Bitcoin. Obviously, Bitcoin was at 30K then. I'm pretty sure they took a huge leverage short at around that point. Then a month later, it heads down to 25K. And my response to him was, your confidence in knowing what is happening behind the scenes is unwarranted. Why would he go short and then pump Bitcoin in his interviews? That could have been a risky move. And I think people overestimate how good these trading houses are. People who haven't worked in finance sometimes have the wrong impression that big Wall Street trading desks are these amazing cash cows that just can't lose, when in reality, they are definitely not. Here's an example just earlier this year where Goldman Sachs lost around $200 million in the markets. If they had a money printing machine, this would not have happened to them. Same thing happens to BlackRock, though this appears to be more a result of them losing assets under management, because on their website, and you can believe this or not, on their website they say we do not trade for our own account. In other words, they don't use their own money to trade. Now, you don't have to accept that this is true if you don't want to. Maybe they're lying or so. But before I go on to explain why I think that they are telling you the truth, I just ask you, if you're enjoying this video so far, to please hit the subscribe button. That really helps out with the YouTube algorithm. Here's Symbiotic8480 talking about BlackRock and saying, what if they manipulate the price down so that they can accumulate and then pump it up to profit and then repeat that process forever? And this makes me ask the question, if you had a magic trading machine that could short something and force the price down, take profits, then go long something and force the price up and take profits again, would your revenues and net income look like this? If we take a look at Goldman Sachs's income statement, we can see that their revenues over the past couple years have fallen from 59 billion to 47 billion, down to about 45 billion over the last 12 months. And if we look at their earnings per share, it's really halved from 2021 to 2022, going from $60 per share to $30 per share. This does not look like a company that has a magic money making machine. And we can see that their stock has also gone nowhere for over 2 years. The same thing applies to BlackRock. Revenues falling from 2021, about 19 billion, down to under 18 billion in 2022, and their earnings per share falling as well from about $39 per share to $34 per share. Again, a similar situation where their stock has been stagnant for even over 2 years. So these do not look like companies that have some magic trading machine that can make money. Otherwise, you'd expect much more consistent profits and steady revenue growth. The next question concerns the OTC, the over-the-counter market explained. This was a question from David T. As I said before, OTC just stands for over the counter, and what that means is that the trading is not necessarily done on an exchange like the NASDAQ or the New York Stock Exchange, the NYSE, when it comes to stocks, or something like Coinbase when it comes to Bitcoin or crypto. These are all examples of exchanges. What OTC usually means, it's usually just a bunch of guys with computers sitting in a common room in some office somewhere, and then possibly connected to similar groups, either from within their own company or other companies all around the world. So you may have a Goldman Sachs trading desk that talks to a Bank of America trading desk or something like this, and they can execute orders for large customers. If you're a hedge fund, if you're a family office, if you're a high net worth individual, you can call them up to buy or sell stocks, bonds, currencies, have them help you structure complex derivatives to make complex bets. You could also use them to buy Bitcoin. And there are examples of this in the Bitcoin ecosystem. We have River Financial. They have their private client services where they serve people who are buying more than $100,000 worth of Bitcoin at a time. Swan has something similar. They call it Swan Private. How do I know about OTC trading desks in general? I use them many times to execute multi-billion-dollar trades for a hedge fund that I used to work at. I've also personally used them to sell pre and post IPO stocks. So this is basically how they work in very general terms. Let's say Jeff Bezos wants to sell $100 million worth of Amazon. This is a large block trade, you might call it. And then there are two hedge funds. There's hedge fund A and hedge fund B. Hedge fund A wants to buy $40 million worth of Amazon. Hedge fund B wants to buy $60 million worth of Amazon. And then what the OTC trading desk will do is they'll just match these orders. It's called crossing the orders. And then they'll charge maybe half a penny per share. I don't really know what these groups charge anymore. Or maybe they take some sort of spread. But they basically cross sellers and buyers and enable a market in this way. And when this happens, does this trade appear on the NASDAQ exchange quote system? No, it does not. But does it have an indirect effect on the exchange traded price of Amazon? Yes, it definitely does, because if those hedge funds were not buyers, then Bezos would need to sell bits and pieces of his stock out into the NASDAQ market. So what the OTC desk is, it removes some of that selling pressure by matching the buyers with the sellers. And in this way, it actually does have an effect on the real market price as quoted on the NASDAQ. And you can think about it this way. If Bezos wanted to sell $100 million worth of stock and the OTC desk could only find hedge fund buyers or high net worth buyers or family office buyers for $95 million worth of that stock, there'd be this deficit of $5 million worth of stock that they need to find a place to dump on. In that case, that's a small amount of stock, especially when it comes to Amazon. They would sell that on the NASDAQ, probably for Bezos, do the work for him. So what this leads us to conclude is that any buyer or seller mismatches eventually make their way to the public markets, to the publicly traded exchanges, both in terms of actual trades, as we saw in this example, as well as in terms of rumors. These trading desks sometimes talk to each other, as I've found out the hard way, and you can hear stuff like, I hear that Bezos is selling off 5% of his holdings, and what these rumors would do, especially if there's a high probability of them being true, and hedge funds can decide for themselves whether they think it is, this could lead hedge funds to front-run Bezos's large block trade and selling by shorting some Amazon stock on an exchange, which again helps to affect the price of Amazon across public stock exchanges, whether in the US or Europe or Asia. So the same thing is true, most importantly, when you buy Bitcoin from an OTC trading desk. If you use Swan, if you use River, for example. I have no knowledge of what goes on behind scenes, but I have a good idea of what I think is happening. They'll probably source some liquidity for you from sellers that have already contacted the desk. So they may have someone who's been in Bitcoin for a long time. They want to take a little money off the table, and they call up Swan or they call up River and they say, I'd like to sell $10 million worth of Bitcoin at $26,000 per coin or higher. And then you can, when you go to buy Bitcoin from Swan or River, maybe they'll use some of this liquidity for you. Maybe they'll give you $500,000 of this or $1 million of this. They may also source some liquidity from other OTC trading desks. So River Financial may call up Swan and say, hey, I need to source $5 million worth of Bitcoin at 20, and I'm willing to pay maximum $26,000 per coin, etc. Or Swan might call River Financial. These OTC desks may also source some liquidity from centralized exchanges like Coinbase or Gemini or Kraken, or even from decentralized exchanges, though those tend to have much lower volume. So just like with Amazon, this buying or selling pressure from Bitcoin OTC trading desks will indeed find its way to help set the trading price of Bitcoin, the trading price that we all see, and that is roughly similar around the world to the extent that there are boundaries and they can be arbitraged. If I can buy Bitcoin at Swan, and this is how that arbitrage works, if I can buy Bitcoin at Swan for, let's say, $26,000 a coin, and then sell it at $26,500 on Coinbase, I'll happily do this all day long, because I can make $500 per trade before fees and commissions, and this is a pretty easy way to make money. Disclosure, I never do this. I'm a hodler only, and usually these pricing discrepancies are not quite this wide. So this isn't something you should try at home. This is a waste of time. But for the principle of it, by buying Bitcoin at $26,000 from Swan and then selling it for $26,500 on Coinbase, I'm basically causing the price of Bitcoin in both places to converge. I'm making the Swan price of Bitcoin go up a little bit and the Coinbase price of Bitcoin go down a little bit. And so perhaps they converge at $26,250 on both Swan and Coinbase. and then that kind of arbitrage trade is no longer possible. And so this is how arbitrage, how buying and selling, buying in one place, selling in another, selling in one place, buying in another, can help to drive prices to roughly the same value. Conclusion, arbitrage across OTC trading desks and by institutional traders, and even by retail traders across centralized and decentralized exchanges, as well as across OTC trading desks, causes the price of Bitcoin to converge across all of these platforms. Some people seem to have the mistaken belief that if you buy Bitcoin from an OTC trading desk, unfortunately, that buying pressure is not helping Bitcoin. And this is just not true, because all the markets are connected, and you do have this sort of arbitrage taking place across different markets in different geographical locations. If you enjoyed this video, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.